Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest news at a breakdown on GameStop. I'm your host, Dr. Michael LoPiano. We are back outside. It is another lovely day today, and a lovely day to do some thinking about our favorite stonk. Today we are thinking about what's going to be persisting now, what we might have ahead of us as we head into these next couple weeks leading up to the end date, going over our options data, going over some things we're seeing in our technicals to give ourselves a heads up on what might be coming over these next 2 days into September OPEX. So it's coming up in our discussions. We are going to start, of course, with our daily Bible reading. We are continuing with our reading of the book of Genesis. Continuing on with Genesis 2, of course, yesterday we started to talk about this older story, this older account of the creation, of course, which is sequentially listed second in the Bible. It is prioritized as secondary to the first creation account, even though the recording of this account is likely earlier than the first. And we looked at what man's place is in the cosmos, an anthropocentric cosmos, which is depicted here in the second account. And so what we have here is an account of man as he is brought into contact with other life, of course, right? So man is put into an idyllic environment where he has everything he needs, right? That's this sort of place where man, being male human in this particular case, is introduced to the world, and sort of what he discovers next, what is created for him in a certain sense, right? Comes next. Of course, we know, in sort of from a cosmic perspective, that animals, that other life precedes man, that man is a late iteration in this development. But in the anthropocentric cosmos, where man is the center of the universe, animals and created life and this sort of thing are secondary. They come into being as a result of man's interest, something like that. So man has everything he needs in terms of plant life, in terms of food, in terms of shelter, surroundings, the such, with the creation of the garden. And here we have introduction to animate life. It begins. And the Lord God said, "It is good that the man should be alone. I will make him an helpmeet for him. Out of the ground the Lord God formed every beast of the field and every fowl of the air, and brought them unto Adam to see what he would call them. And whatsoever Adam called every living creature, that was the name thereof. And Adam gave names to all cattle, and to the fowl of the air, to every beast of the field. But for Adam there was not found an helpmeet for him." Interesting. So we have some interesting terms here as they come through the King James Version. The first thing that stands out about this particular passage is very important, right? So far up to this point in the creation accounts, we get this phase of creation, which is the ability of the divine to assign value. And this is always a positive value, right? It is, this has value. For example, here is light and it has value. It is good to say, right? There is value and there is the absence of value. Here are animals. They are good, right? God saw that it was good. Value is infused through this power of divine sight. And what we have here in the second account is we have our first notion that something is not good, that it has a sort of negative value, right? Of course, we already have this notion of evil, which is introduced slightly beforehand. So there is a negative type of value. There is a positive sort of value. And I suppose there is what is simply valueless. But what we have here is that loneliness, for human beings to be alone, that this is the very first thing which comes as a result of the ordering of creation, that the divine presence recognizes as not good. So in essence, there is an implication here that loneliness, solitude in and of itself, separation from the rest of life, a lack of companionship is something like the root of all that is ungood, right? All that is not good, all that is assigned a negative value that happens to be within creation. So very interesting to note this. And the first thing, right, that of course man comes into contact with as a result of the appearance of this ungoodness is animate life, animals, right? Which God says is his intent to make a help meet for him, so to offer some form of aid. But the interesting is this help meet. I think in the Hebrew, if I remember this correctly, there is something of a strange construction, right? The Bible uses strange linguistic constructions at times in order to get across a very, very specific image. And here we have something help me for, but there is an idea in the Hebrew that it is a help meet against. So, like, a helper against, right? An aid against. Right? So, something that is meant to complement, but to contradict man. And all kinds of animals come into being as a result of creation here, but none of them is suitable as this help meet, right? Something that will meet man on man's terms, that is in the male sense. And so it is, right, of course, that the first man here, of course, encounters that, well, within this divine order which we've had given to us in the first book of Genesis, that animals subject themselves to man, right? They are not on the same order. They are not on the same level, right? Man cannot truly rid himself of his loneliness, cannot find something to equal and equivocate him, to complement him in his existence, to complement and yet at the same time oppose outside of his own kind. Man cannot have that solely in the domain of plant life. We as human beings, we as men, let's say, that's what it says in this, but this story specifically, but this can be generalized, of course, to human beings. We cannot be fully ourselves without others of our kind. We are not good. We cannot experience that goodness without other living beings, and not just other living beings, but other living beings that have that that complementary yet oppositional spark, complementary yet contradictory spark of divinity within them. And so, right, this will lead us, we'll see, we'll take a look at this next time. This leads to man's discovery of woman as a just helpmeet against him. So, yeah, so that's our reading for today. Some things for us to think upon, to think about with respect to our lives. If we're having a good, I always think of this too. If I'm stuck in a rut, if I'm having a bad time, no matter what it is, right? I'm not, I could be doing everything right. Work's going well, trading's going well, stuff's moving along, but if I'm not spending enough time, if I'm not collaborating in some kind of capacity with other people, it's just not the same, right? You can go pet kitties as much as you want, especially here in Cyprus. They're all over the place. But it just, something is missing, right? Something is missing from human life without that contradictory yet complementary companionship. Right? So let's move on to our principal discussion of GameStop today, as of course we approach market open. Little bit of a surprise here with how price action ended toward the end of the day. Certainly interesting to take a look at. We'll consider this in a moment, as long as I can get the article up here, which I can. There we go. Before we consider this, we of course have to take a stop for our daily gratitude. And today's daily gratitude, of course, for today's newsletter and video breakdown goes out to Chan Yang Lee. An interesting name. I would say, I remember I went to, was it maybe like 8th grade? I want to say it was 8th grade. There was an exchange student to my school from Kazakhstan named Chanyang Lee, if I remember correctly. So if that is you, Chanyang Lee, if you are that Chanyang Lee, it's really great to see you once again. I don't know how many Chanyang Lees are out there, but if that's you, man, if that's you from from Christian Heritage back in 2006 or something, like, great to run into you once again. I hope things are great in Kazakhstan. Many thanks go out to Chanyang Lee, as well as to our monthly supporters, Not Medical Advice, Kurd, Let's Go, Cosmotropic, Dayswag52, and Hey Luckies, aka Faithless Looter. So yeah, very interesting price action toward the end of the day here. Pretty much the whole day, I was like, yeah, this is what I expected. Right, so come out of the gates, immediately drop down, right? You notice, so I superimposed, I went ahead and I sketched a line that approximates the 200-day moving average here so I can see it at lower time intervals on my chart. And sure enough, yeah, we opened up decently above that. I thought, all right, well, we're probably moving back down here. So, yep, that's what we did. Kind of scrubbed right around it, moved up a little bit right when we got Powell's announcement. FOMC 25 basis point cut, of course. My thought, I even posted about this, pretty sure this will have already been priced in, and we won't get hedging. We won't get something of a response in terms of dynamic hedging to GameStop thereafter, but we'll probably then go ahead and start to cool off, and that's what we did. What was very interesting was the fact that then we just beelined it right up back close to where we opened. I mean, we closed around 610, but moved into the almost to 2630 again, above the 200-day moving average into the close. And we're seeing a little bit of that. We're seeing a little bit of more price action in this area pre-market here. Now, I'm still cautious on this, but I will point out that what it did look like to me, taking a look at our 4-hour time frame here, it does look like what we are seeing is a very large volume-weighted average price order, which is being punched in over multiple days. So number one, what is a volume-weighted average price order? Okay, so we've talked about this before, but it's always good to have a refresher. So when you see something like this, when you see this pattern, a great way to recognize it is if you see the price really sticky with respect to a very tight aggregation period. So for example, like a 20 line intraday, the 20-minute line intraday is a big one, or the 24-hour, which I think is the same as like it's a little tighter than the 54-hour, but or 50-hour. Is it the same as the 100-hour? Not quite. But the 20-hour here, right? Or 24-hour. This is the 24-hour simple moving average. When you see this kind of respect for this line like this, generally, this is going to be your indicator that a volume-weighted average price order is going through. Okay, now what is that? A volume-weighted average price order is when a major institution, when an institution needs to go ahead and clear out, let's say it's some settlement stuff, obligations, needs to go ahead and clear out a position. They want to do so in as cost-effective a way as possible. So what they will do is they will enter into volume-weighted average price orders, which brokerages facilitate, right? For example, you can go, if you can even see different types of VWAPs. Interactive Brokers has a list of this. You can see different types of VWAPs that Interactive Brokers will facilitate for you if you are one of these types of institutions. But basically, right, like what this allows them to do is this allows them to acquire what they need in order to settle their, meet their obligations, but without spiking price and volatility unnecessarily, which then might disrupt their options positions or might mess up their portfolio otherwise, might cause something of a run on the stock, right? If they bought all of this they needed to acquire. If they bought all of this right at the same time, right, then this would, if we went in an hour, if we went from 24 something to 2650, I mean, IV would go nuts. People would pile in. Traders would dogpile options. That would complicate things for them, and it also would mean that they probably wouldn't get as favorable a price on their order, right? Because you'd have everybody rushing in to pump the stock, and then they might get blown out of their position, right? They might be having to buy in the 27s or 28 or 29 or 30 or something like that. So going in with a long-term VWAP like this ensures that they can get the best average price on their particular order. So it does look like we are going through a very long-term volume-weighted average price order here that's taking place over the course of a week. So interesting to see us find support there, mostly in after hours, pre-market and after hours. We see this kind of coming in. But yesterday we did get that close to the end of the day, so that's where we reversed down around 25.50. That does seem that this view up is still going on. Now, how much longer is that going to go? I don't know. We are going into the end of the week. We are going into September OPEX. I am still cautious. We are overextended on a number of different factors. We are showing overbought signals on our RSI daily. We are showing overbought on our RSI 4-hour. We are overextended over the 200-day moving average and the 100-day moving average. We do not have the same type of framing. We do not have an ideal kind of options framing in this range over 26. And going into next week, we do have a persistence of our call wall at $26. We do not see OI on the call side rushing in to populate those strikes up above $26. As we can see down here, right? So we do see some coming off. We did see that 25 position weaken a little bit. $25 for this week is still our largest call OI position. It's our largest OI position overall. 26 is slightly larger, or excuse me, slightly smaller. So, we might get something like a close in the middle of these two strikes. 27 has also stepped out as a large strike in its own right. So we may see ourselves trading in between 25 and 27, but I'm still cautious about seeing things get readjusted back to the downside. We have seen that a number of times in the past. We are going into an OPEX, and it's my suspicion that seeing things close, back down around like 24.90 or something like that, would more or less satisfy a market maker quite substantially here. If this is a multi-day VWAP order or multiple multi-day VWAP orders, maybe that are satisfying ETF obligations, this could peak today, and then we start moving a little bit to the downside. So we did have a little bit of a lower close yesterday versus the day before. Maybe today we close a little bit under $26. Maybe then Friday we then move down towards 25. I mean, we could keep moving higher, but I'm just very cautious of this. Right, we've been in this situation before. Things are looking good. We've got nothing. We get pulled down pretty abruptly before a major options expiry, like a monthly OPEX. So just very cautious on that. Some good signs, though. We do see that Max Payne is moving up. It's $24 for this week. It's $24.50 for next week. Good to keep this in mind, right? It is good to see this moving up, but it is not moving up at the rate where, right around $26. Oh, right around, no, it's still below 25. Max Payne still below 25. And our net GEX position, right? So right now our call wall has moved up to 26 once we overcame that 25 position. For now, that 25 is offering us some support intraday as the charm effect works its way in. So normally when we're dealing with charm, we're thinking about out of the money calls. Those out of the money calls are supplying downward pressure on the stock as market makers de-hedge their position and as the delta on those contracts decays over time into a given expiry. What's very interesting, of course, is we have a very large call OI position to our downside that is offsetting that decay by having time-related delta appreciation. So this is also the charm effect. As an in-the-money call gets closer to expiry, the delta appreciates as the likelihood that it will move out of the money becomes lower and lower. So for now, that is kind of keeping us pinned in this 26 area, but a little bit of adjustment, a little bit of push right underneath this going into tomorrow's trading, today's trading, tomorrow's trading, could then result in some of that downward, some of that charm effect shifting market maker hedging forces kind of in the background to being more depressive than supportive, with the possibility that could overcome that $25 position. Now, not saying that this will happen, not saying it's a foregone conclusion. I mean, we certainly look good heading into next week based on where we have our highest concentrations of net call gamma. They are at $26 and up. But I am hesitant to say, oh yeah, guys, we are just pumping. It's all moon, put up or shut up. No, always want to approach the situation cautiously, always want to understand what institutions are capable of, always want to understand that they can rip us down $3 to $4 if they feel like it, right? That this is part of what they set up. So, you know, keeping a clear head as we go into this. Obviously, very, very exciting to see the market respond very favorably to GameStop earnings for an extended period of time. Great to see this type of support in the stock, but at the same time, also keeping in mind that this type of price action can be the result of something of a de-risk before, you know, a gradual de-risk before that we, you know, kind of go into something of a smaller slump coming out of the ex-dividend date and the dividend issuance date on October 3rd and October 7th, respectively. If you go back, you look at historical examples, even in GameStop, right, the last time they did the stock split and whatnot, you know, special dividends and such with other types of stocks like AMC and the ape dividend or the rocket squeeze, right? We will likely appreciate into the issuance of, well, there's going to be a lot of brokers that are going to be selling the warrants ahead of time, or, you know, getting the cash to offer cash in lieu of the warrants, you know, going into that ex-dividend date. And you know, the dividend issuance date. So good to anticipate, good to keep in mind that it is possible that, and likely based on what has happened in the past, that we would then slump kind of after that date into October OPEX. October OPEX is also a big OPEX because keep in mind, October OPEX opened way back. It was quarterly OPEX, opened way back during our May and our June run. So there is a lot of OI concentrated at October OPEX that was opened way back then. That's definitely one, if I understand correctly, that likely market makers are going to want to see close and die and, you know, expire in an orderly fashion, a way they're used to. So again, right, don't mean to be, you know, I am not a bear on GameStop overall by any means, but I like to stay clear-headed with respect to the return of this type of volatility, and understand, always remind myself what institutions are capable of, say, on the road to finally seeing the stock freed from this, you know, legacy short interest and some of those fish hooks that are pulling us down here. So, yeah, so that's it for today. Thanks very much to everyone, as always, for watching and listening. Looking forward to seeing, yeah, how this week turns out. It's going to be an exciting week, no matter how it goes. So, yeah, thanks very much, everyone. We will see you tomorrow. Take care now.